Welcome to the latest Evershed Sutherland Legal Insights podcast.
Hello, I'm Matthew Allen, Global Head of Financial Services at Evershed Sutherland. Welcome to the latest in a series of podcasts exploring trends and opportunities in global financial markets in 2025. In this series, we will be hearing from our clients and industry observers on a particular hot topic issue, which our own subject matter experts on both sides of the Atlantic will then reflect on in a sister podcast. Today, we'll be looking at trends in financial services M&A. And to help us do this, I'm absolutely delighted to be joined by Nikki Eastham, who serves as International Head of M&A and Strategic Development at fast-growing insurance broker Specialist Risk Group. Nikki, welcome. It's great to have you with us today.
Thank you for having me.
Oh, great pleasure. Maybe you could start by telling us a little bit about you and your personal background, your roles and responsibilities at SRG and what SRG does, I guess.
Very happy to. So I started off studying economics at university, and then I later joined PwC on the graduate program in the corporate finance team focused on financial services, where I qualified as an accountant. And I spent my first 4 years there before going on secondment to Singapore. So moving away to sunnier climes and a slightly broader experience. I then returned back to the financial services corporate finance team in the mid-2010s, focused again on financial services, but more specifically on insurance distribution. And in 2021, I decided to move in-house and I joined SRG, which is a UK headquartered specialist insurance distribution business with activities across retail, wholesale and underwriting. And I joined as head of M&A. We are a private equity-backed insurance distribution business. M&A is a core part of our strategy. So it has been a busy few years, but a fun few years. And having taken on new investment from Warburg Pincus and Temasek last year, I have shifted my focus away from our home markets, and I'm now focused solely on international M&A and strategic development. We've started that journey with the acquisition of an asset in Singapore and with the acquisition of 7 businesses across the Netherlands and Belgium as the beginning of our continental European business. And I look forward to a busy few years ahead as we begin to grow those out and to really achieve scale on an international basis.
Great, thank you. I can't think of anyone better placed to help us explore some of these themes today. It's a truism, I think, often said that financial services and insurance is a scale business. There's a lot of resources needed in order to meet compliance and risk requirements and all of these different things. I suppose, how do you define scale for these purposes? Is it always an advantage? Is that driving M&A and how do you look at that against the backdrop of, specialist niche players and how do you sort of strategize, M&A through that and what role does scale play?
It's a really interesting question. And I suppose that scale means different things in different markets, and you need a different scale to be an effective bank than you need to be an effective insurance broker. But broadly speaking, I think I define it as the point at which you begin to experience a disproportionate competitive advantage. And that could be for many reasons. It could be because you're so big that you can suddenly achieve economies of scale, or you have the ability to invest in the best technology and the best people. Or it might be that you're small but specialist and you've got critical mass and a disproportionate level of intellectual capital in a certain market. And that at that point, you start to derive incremental advantages because you can attract clients and talent more easily. And so I think it really, really depends on which market you're in and what your focus is. Obviously, being big has portfolio diversification benefits to it, which is helpful from an M&A perspective because it opens up the breadth of opportunities that you might look at. But equally, I think that you don't have to be big to have achieved scale in many markets. And we particularly see that with our focus on specialism. And as we invest in certain specialisms that we plan to take international, we don't need them to become large from a premium perspective to have achieved scale in those markets.
I really like this idea that scale is not synonymous with size, that it's about reaching a level of critical mass in relation to intellectual capital, and that may mean that your scale is, very different compared to another business. But that's obviously something that you've thought very carefully about at SRG.
Yes, we are ultimately a specialist business. Our focus is on people, culture, and specialism. And we therefore want to make sure that we take a targeted approach to growing businesses that have the right people in and the right expertise in to achieve the best results for our clients. And those may reach scale from our perspective and from a success perspective before they are large in the context of a global business.
You touched on private equity. Obviously, you've been on your own journey in that respect. A lot of dry powder out there looking for investment opportunities, as well as, a lot of strategic focus in terms of existing incumbent institutions looking to develop and diversify. Those huge pools of capital, how's that shaping, or how will that continue to shape the pace and nature of deals in the FS space in the coming period?
I think if I focus more specifically on the insurance broking space, given that that's where we're focused, that the impact is two or threefold, really. On the one hand, you see demand for platform assets, really, really high demand for platform assets, very competitive processes when good businesses come up. And on the other hand, you also see increased appetite for bolt-ons, because once somebody has a platform asset, it needs to grow at pace, it needs to grow strategically. And in order to do that, M&A is often, not always, but often a key part of the strategy. And so you both see an increase in appetite for platform businesses, and we can debate what a platform is, but you also see appetite for bolt-on businesses to expand those out, and in some ways to consolidate, or in other ways to diversify those businesses. And I think there's a sort of side impact of that, which is that you also see a certain degree of professionalization and a certain level of standards being required in an industry. So I think not only does the money drive activity, but it also drives certain behaviors as people seek to become something that can benefit from that money being in the market.
And just sort of building on that, it's interesting, because when we talk about big pools of capital, I mean, there's the cash component to that, right? In terms of, you need cash to make things happen and to do all the things that you described. But also, I'm intrigued by how you say that the I guess the right investor can drive changes or benefits within the business, as well as just bringing the heft of their financial muscle.
Yeah, I think you have to be really careful not to assume that every deal is going to be a good deal or the right deal. And at SRG, we have an incredibly planned way of undertaking our M&A. We really, really focus on building a business that's rooted in culture and expertise and opportunity. And we make sure that we choose the right assets. And I think it's really important not to confuse having lots of money available with the requirement to necessarily spend it. You need to make sure as a business that you invest in good businesses and the right businesses, and that capital is deployed in the most appropriate place for you and your strategic journey.
And you touched on technology earlier, and we definitely see in certain segments of the market technology driving FS M&A in lots of different ways, and technology impacting business models, products, processes, right across the street. For you and for your business, and or you may want to answer it more generally, but how's technology and things inevitably like AI, generative AI, how's that going to impact your business, and how will that shape your strategic decisions, including future M&A?
Technology is obviously a huge enabler of businesses, and having the right technology and being invested in the right technology has huge strategic advantages for everybody and allows you to scale up more quickly and more efficiently. And actually, in the insurance broking space, technology is still quite fragmented. If you look across Europe, the core broking systems people use are quite different in different countries, and there's still some way to go until that's been unified. So there's still plenty of technology investment to be made. And of course, the importance of really understanding your business and your data and being able to analyze and enrich and use that to gain competitive advantage is so important. And so I think technology investment for us is important, and for everyone in the industry is really important. Sort of focusing a little bit more on AI specifically, particularly in this world of specialist commercial lines insurance broking, it really is a people business. And AI is an incredible tool to help you to improve your efficiency. And as it learns, it's going to get more and more and more useful. But today, I think it's got, a little bit of humanizing to do if it really wants to make an impact in such a people-centric business. I don't think yet it's ready to take over entirely.
Yeah, no, I mean, I agree, and it's interesting that point. Financial services, whichever segment you operate in, it's fundamentally a relationship business, and
Exactly.
I guess what you're saying is that technology will drive M&A, but so too will that you're always going to want to acquire great relationship managers and great client facing people and assets.
Exactly. And if you look at the M&A we do, since SRG in its current form came into being in 2019, we've done over 40 acquisitions, and a large proportion of those are actually bilateral. A large proportion of them, were one-on-one deals that we did with the vendors, and that's down to relationships. And you just cannot underestimate the value of relationships in this industry.
And then you mentioned that you're on your own journey in terms of international expansion. Obviously, that's a big area of focus for many institutions looking for that geographic diversification, and expanding those different routes to market. How do you go about determining, where to go and how to attack a particular market? Because there's so much complexity and fragmentation. The world's a pretty complicated place. How do you identify those opportunities and triage the risk?
So we would say that our international strategy is about mindset rather than about geography, that it is about picking the right businesses. It is about attracting, empowering, and developing specialists, about winning on expertise, and ultimately about building a business that is diversified across territories and distribution methods and product lines without having to plant flags in certain territories, for example. So rather than having a strategy that says I must be in X number of countries or I must acquire X specialism, we look instead for people and businesses whose culture and specialism and attitude matches with our own, where we feel that we can partner really successfully, whether that is taking a particular niche specialism globally, or whether that is buying a platform asset in a certain part of the world from which to grow out. We take different approaches as opportunities arise. And, whilst of course we have a strategy and of course we have thoughts in our mind about where we'd like to go and what we want to do, we remain very much of the view that you need to buy the right businesses. And if a year goes by where we do very little M&A, then we don't matter. M&A is not our reason to be. It has to be the right opportunities, and we're focused on acquiring talent as well as acquiring M&A opportunities. We will always judge each one on its own merit, and we will, with real intent, internationalize the business without getting led down a path that, there's something available over here, so I will buy it. It's always going to be people, culture, specialism, market opportunity that drive our activity.
And look, I think, that's a great message to finish on in a way, because I suppose, we've talked a lot about M&A in the sense of transactions, but actually it's about the integration and what that means for the business. The 2 + 2 = 5. And I guess to your point there, if you are not thinking about the cultural fit and the people and about, you're just thinking about planting a flag, 2 + 2 may not equal 5. It may not even equal 4.
No, exactly. And equally, thinking back to our earlier discussion on technology, of course, you've got to invest it in the right platform and governance that can scale borders in order to be successful internationally as well. So it's a combination of many different things.
Nikki, I could sit and chat with you all day. It's terrific to have you with us, but I'm going to have to draw a line there. Thank you very much for joining us today and for your really helpful insights. And of course, thanks to you, the listeners, for joining as always. If you'd like to know more about any of the issues we've been discussing today, or how Specialist Risk Group can help you and your business thrive, I'm sure Nikki and her colleagues would be delighted to hear from you. So please don't hesitate to get in touch, and we can pass on contact details if needed. Please also do look out for the next podcast in this series with Evershed Sutherland Partners, reflecting on what Nikki has shared with us today. That will appear on all our usual social media channels in the very near future. Thank you.
Thank you for listening to the Evershed Sutherland Legal Insights podcast.